Fren, which is the fastest growing of the Indonesian stocks that we cover. So if we look at the sales, this is the data. It's 91% data, and the data is growing at about 35% year on year. And in the first quarter, the sales growth was even higher than that, 41%. So we're going to assume in our model that the sales can keep growing 35% over the next 12 months, and it looks like that. In terms of costs, there's quite a big FX effect in the first quarter, but we're going to assume, rather than ratio, that costs stay around the average of the last 12 months, which is about 1.8 trillion. So that would mean, as the sales go up, that the margin comes up, the cost ratio, comes below 70%. So this would be in line with some of the other telecoms like XL. So that's our forecast. And the impact of this is that the cash flow, which is already showing signs of improvement, so it's minus 3.3 trillion for the last 12 months, but you can see the first quarter is only minus 142. So that brings us much less negative cash flow over the next 12 months, and the cash flow actually turns positive at the end of this year into next year. Cash flow is still negative. The net debt increases a little bit, but not too much more. And this is what happens in the valuation. So we're using just the fourth and first quarter cash flows annualized, and then we use this is kind of what we've learned from US coverage, so we're using a much more aggressive valuation at 100%, which gives us a target price of 181. So that's how we work Fren.